All right, what's up, everybody? Dave Savage here with Trust Engine and Mortgage Coach. I'm interviewing Ryan Smith out of Raleigh, North Carolina for the very first time. We had a couple minutes of prep, and I think you guys will notice when you meet this guy and you hear him talk, you're like, who would not trust this guy? I wrote down high tech, high touch, although I get the feeling it's really more like high touch, and then he just uses high tech to deliver a better personal, valuable experience to consumers. So Ryan, good to have you
Yeah,
here on Zoom.
yeah. Great to be here. Thanks for inviting me.
Yeah, no, thanks for being here. And by the way, just so Jeremy gets a little love, why don't you tell me what you told me before we started about our YouTube channel and Jeremy Forcier?
Well, so Dave asked me, he's like, "Hey, do you listen to the weekly interviews?" And I go through periods of time where I'm busier and not busier, and I haven't listened to very many recently. But anytime Jay Force is on, my buddies always message me, "Hey, Jay Force is on," so I always watch those. But I've watched literally, I would say, hundreds of these recordings over the years. I have a second lease on life. I have a toddler at home, so I have a 19-month-old, and so. I'm squeezed for time these days with my little munchkin at home.
No, I love that. And so Jeremy Forcier, you are making impact in Raleigh, North Carolina, to the point
100%.
where this guy's friends actually like Jeremy's on Mortgage Coach and he never misses it.
That's
But
right.
hey, thank you for being, such a longtime member of our community and now being a leader in our community.
Yeah.
Share with your production so everyone knows kind of how many families you serve a year, a little bit about your volume, and then we'll get into how you win.
Well, this June will be my 28th year in the mortgage business, which is wild. So started doing loans, I was like 23 years old, and I've never done anything else. I was in the broker channel for 13 years. Then we had the financial crisis, and I decided to join the banks, go to the dark side, so to speak. And it's been a good niche for me. And I've been in that ever since. I've been in my current job at United Community Bank now for about 5.5 years. During the heyday of COVID, I was closing, like 74, 75 million. Last 2 years, I've closed 43-ish million units, nearly the same year over year. I did 129 units 2 years ago, 128 units last year. And I just keep pushing them out. I think with UCB, I've done 904 mortgages now at this point for about 280 million. I'm in Raleigh, North Carolina, and I tend to be eastern part of the area is kind of my market area. And so my loan amounts tend to be a little bit smaller than what I'd like, but it's okay.
Yeah, well, I mean, first of all, it sounds like you're helping on average 10 borrowers per month either get into homeownership for the first time or optimize homeownership, move it up or doing refis. What percentage of your business is purchase versus refi, and what percentage of your business is first-time home buyers?
I would say the last 2 years, probably 95 to 98% of my business was purchase business. So quite a bit of it. And, I'm waiting for us to get these rates that start with a five handle. And I've got probably a solid 300 clients. I'm going to make a big hit for helping them save money on their mortgages. But first time home buyers is a very big piece for me. I'm not sure of the percentage, but it's pretty large percent. I do a lot of down payment assistance loans. And I know with North Carolina, housing is very popular here in this state, and I do usually one or two every month.
Yeah, no, it's one of the best states for down payment assistance programs. And I always tell people, I don't know, are you familiar with First Home IQ, the
Yes.
nonprofit? Yeah,
Yeah.
so I always tell people that, hey, first of all, if the family has the means, and there's a lot of equity in America, so a lot of families can help families buy homes, great. But if they don't, and there's never been more down payment assistance programs, and they've never been easier to get,
Yeah.
and I think Mortgage Coach, they've never been easier to understand for consumers. Would you agree with all that?
That is correct. I do TCAs for down payment assistance all the time. I tend to focus on the North Carolina housing. We also have Federal Home Loan Bank money right now, but that money kind of comes and goes throughout the year. So I can't really count on it as much. So I tend to lean on North Carolina housing when I'm helping folks that just really have the ability to make a monthly payment. They just really struggle with that down payment part.
Yeah. So anyone listening to this, guys, first time home buyers, just such an important opportunity. And the other thing, what percentage of your first time home buyers do you think are in your 20s, 30s, or 40s? Like if you had a guess, just back of the napkin, what do you think the age
It's
range is?
definitely, statistically, I think they say like 38 years old now is the average or something. And I'm definitely in that 30s bracket. You run across a 40-year-old that has never bought a home before every once in a while, but it's definitely not normal. Definitely do loans for folks in their 20s as first-time home buyers also, but predominantly in the 30s.
One of the things I believe is that we need to really lean into our database and get families helping families and get more people in their 20s buying homes. Do you agree with that as a real focus?
We always struggle to figure out ways to kind of reach out to our past clients. And I think I've been doing it long enough now that's a really good call to make. All the clients that are in their 50s and their 60s and their kids are at that age where they're buying their homes now. That's a really good call to make to folks. It's like, hey, what are your kids doing to get ready for their first home? Because, my dad had to help me buy my first car. He had to co-sign for me, way back when. And I think it's sort of like having that conversation with parents, and that's something that I don't do, but I should do because that's our next wave of business, right? And helping folks get in there a little bit sooner so they can
Well,
build wealth.
I'm giving you and everybody listening a push to do that. It'll be good, from a just purpose, making America better, and it will also be profits. You'll do more loans and help realtors sell more homes. Did you see the most recent interview with Jeremy where he said that like half of his 8 million in production right now is coming from first time sellers? And he did a whole message around, hey, everyone who bought over the past 3 to 7 years, they got a lot of equity,
Yeah.
and he's reaching out to them, and he's got. Did you see that? And what are your thoughts?
I saw part of it. I haven't seen the whole thing, but just before I came on the Zoom call with you, I literally sent a TCA out to a guy that I helped him purchase his home in 2020. He paid 575 for the home, and right now, according Zillow Realtors, it's worth about $1 million. And
Wow.
and I helped him 2 years after he bought the house. The rates were higher, so I turned him onto my bank for an equity line, and he's ready to consolidate those two. He's ready to take a look at it anyway. The rate's not that great on the equity line, and he wants to take a look at consolidating the two.
Yeah, yeah. And also just doing move ups, getting those people, you could get an equity line and show them how to buy their new home before they sell. So good. So how are you winning in this market? Like, to do that kind of volume in this market, what, where does your business come from, and what are you doing to win?
Well, as you can see in the background, I'm in a pretty nondescript office right now. I'm actually sitting in a Keller Williams office in Garner, North Carolina, which is kind of a little bit on the outskirts of Raleigh. It's a very small market center, but I'm one of their preferred lenders here. So I maintain an office here, and I'm around agents. Here in this office, I try to be here 2 or 3 days a week. I service a couple of small bank branches in our area. If they have somebody who walks in and wants to talk about a mortgage, they refer them over to me. This past Saturday, I was here at a first time home buyer seminar hosted by one of the agents out of this office. So I do a multitude of things, but generally speaking, I've been in this marketplace for so long and I've got a good reputation of like getting it done. I work hard. Most people think I work harder than anybody, which, there's definitely people that work harder than me, but I work a lot. And so they know I can call Ryan on Saturday, I call him on Sunday, and generally I don't have an off button. I'm like, yeah, I'll get it done for you. So I'm the guy that's known to like get it done, and I don't screw up often, right? We're all human, but when it comes to loans, I don't screw up often, and agents know, like, and trust me.
So
Lots.
here's what I'm taking from this conversation so far. First of all, tell me, guys, if you're watching this, do you trust this guy? Do you just, he just has the ethos of someone that you like and you trust, and then he doesn't outwork him. So first of all, just any new loan officers listening, if you can have that ethos and if you can not get outworked, you're going to have a certain level of success. You can tell that I don't screw up often, so he's got great product expertise. And then you just heard he's delivering, every consumer he helps a mortgage coach experience. So advice and coaching, like they're not getting a fee worksheet and they're getting advice. So describe why'd you become a mortgage coach and why are you so passionate about making sure that everyone gets that mortgage coach experience?
My first introduction to Mortgage Coach was back in 2012, I think, and another loan officer at the company I worked at um, sent one to me. Like I went after one of his clients. Like they reached out to me. We were in a bank, and I'm like, hey, I can do this refi for you. And I sent him a fee worksheet for you. But I knew the loan officer that did their last mortgage. And I'm like, I can't, I'm not going to snake his client if he wants the loan. So I said, hey, I talked to this client, here's what I sent him. And he sent him a TCA. And he copied me on it. And I clicked on it. I was like, holy crap, what in the world? That was my first introduction to it. I didn't know what Mortgage Coach was at the time. And he did that loan for that client, which was totally fine. It was his client. And I said, hey, show me this. And he did. He showed it to me. And I think I adopted it in 2014, maybe. And I've been using it ever since. And I figured out pretty early into that that like this is the differentiator that I've needed because as loan officers, we're basically all peddling the same product. So it's like I have to have a better delivery than everybody else, so they'll want to use me. And I do know how to do a fee sheet in Encompass, but barely. I mean, it's not something I do. When somebody asks me for a quote, it's always a TCA. It always has a recording with it 100% of the time.
So that again, high touch, high personal experience. And what are your thoughts, hearing the news of the Rocket acquisition of Redfin? Does that concern you, or like what are your thoughts around just how big tech is coming into the space? I think Rocket's CEO recently publicly said like we want to be the Apple of mortgage. Any concerns about that or any thoughts on that?
Yes and no. It'll cost me and everybody listening to this some business for sure. But at the end of the day, I think having that local guy that you can reach out and touch, I think there's a value to that. But I don't discount Rock at all. They're good at what they do. They can hit up a lot of people with their tech. And I know the loan officer that is talking to that client sitting in whatever, big call center is turning and burning. They're gonna probably have a sharper price than me because they're doing it cheaper. They're not paying that LO very much. So that personal touch again is I think is going to be the differentiator for me. So I'm not super concerned, but I know it'll probably ultimately cost me some business.
Tell me if you agree with this, but when you look at how you can either differentiate or have a competitive advantage, it could be price, could be speed, could be convenience, and most likely Rocket Mortgage, Zillow Mortgage, these tip to tail platforms, they're going to be able to have a sharper price. They're going to be able to deliver a more convenient digital experience, but they can't be you. They're not going to be local and they're not going to be coaching, the way you can give a coach. So don't you feel like maybe the fact that you use Mortgage Coach has just become that much more important? And, any thoughts on that?
Yeah, I totally agree with that. And it at the end of the day, this is a numbers game, and so I know that a certain amount of applications that I get every month. When I talk to somebody, my goal is to drive them to my website to do an application because I know once I get about three of them or maybe four, depending on the year, I'm going to close the unit. So if I so every conversation I have, it's always trying to drive somebody to do that application because then I know they're serious. And then it's my job to give them numbers that they're happy about and they'll use me. And I know there's a certain amount of those. They're going to go to Rocket. They're going to go to the local credit union. They're going to go to the lender down the street because they just like the way you look better. Maybe I don't know, but I know as long as I do what I do and do it well, I will get enough market share. I just have to keep cranking out the TCAs.
Well, let's do this. You had forwarded over one of your Mortgage Coach experiences. Why don't you just kind of share the story? I'll share my screen
Sure.
and pull it up. Tell us, you don't need to get in any personal information, but just share at a high level, what were you trying to accomplish for this consumer, and what were they trying to accomplish when you put this mortgage coach experience together?
Yeah, so this is just a super basic. This is just one product. The guy is a first-time home buyer. He sold his house, like 6 years ago, and has been renting ever since. And he's trying to. He found this house that's been a total gut renovation, and he just can't wrap his arms around spending $450,000 on a house. And my bank has this CRA loan that this property fits into the parameters of it. So I can offer him this path loan is what we call it, which is technically 100% financing with no mortgage insurance. But because he's super conscious about the payment, I'm showing him 5, 10, and almost 20% down. Once we go to 20% down, I just have to switch him to a conventional loan. The guy's got a mediocre credit score in the 650s, so this path loan is by far the best option for him. So I didn't show him FHA or
So
anything else.
this one,
That
oh, I
way.
get it. I get it. Tell me what you think of this. We're getting ready to roll out a feature where the consumer can interact with the total cost analysis. Like all it's doing is pulling all the data from Mortgage Coach, and now the loan officer can what's the best loan over 5 years? Well, by the way, what question do you think this consumer might ask AI? What's the lowest cash to close? What do you think this consumer might have asked?
He's grappling with doing this total renovation, this home that's been totally renovated versus building something. And I did not show him a CP loan. We do a lot of construction to perm loans at my company because I told him it's like, hey, once we switch to CP, you're going to be looking at an extra probably $3,000 in closing costs, and probably an extra like half point on the interest rate. So I said, if these numbers aren't good for you, we can definitely look at the CP, but it's not going to be a cheaper monthly payment. It's going to be more. So
So
the monthly
probably
payment is his.
cash to close is going to be his hot button. Like what's the lowest cash to close, right?
Not for this particular guy. He actually has money to put down from the sale of his past house, but generally it is the monthly payment for this particular guy. It's not the cash to close.
Okay, so what's the lowest payment loan option? Boom. You know, that's the
Yeah.
one. So, and by the way, when this feature comes out, loan officers will have the ability to turn it on, turn it off. And you, as the consumer is interacting with it, you will get updated and you will have a transcript of how they're interacting.
Very
I
cool.
call that like a new level of sales intelligence because, you kind of know what they tell you when they're in front of you, but you don't really know what they're thinking when you're not in the room.
Yeah.
Now you're going to know what they're thinking and what they're doing by the interaction they're having. What do you think of that?
I think that's awesome. I think it's awesome. It's sort of like one of the unsung heroes of mortgage coaches when you get the little notification in your inbox that, hey, they looked at their TCA. And, it's like, okay, I don't want to be creepy and call them right away, but I make a mental note. I'm going to call them in a few hours and just kind of check in. So I think that's sort of like another way to not be creepy, but sort of know what's going on.
Yeah. Yeah. Well, as long as you're giving people options, you're giving people the transparency, and then you're empowering them to self-educate themselves. Do you like that feature?
Yeah, I think that's neat. And that wasn't probably a good TCA to sort of ask questions on because I didn't really differentiate. It's really the same product, just at 3 different down payments. That's a special case. But generally speaking, I have clients and they're like, hey, I'm a veteran. I have money to put down. Should I use my VA or should I do a conventional? So that'd be a more common thing where I'm comparing different loan options. And then, I always tell people there's always a small downside to doing a down payment assistance program. Like you actually owe this money back, and maybe you should just look at doing a 3% down loan. So let me show you, here's with the down payment assistance, here's without. So those are the kind of things I typically sort of share with people because I want them to have stuff to think about and then to come back and ask me questions about.
Love that. Yeah. And just reminder everybody, there's all kinds of options. Every consumer is unique and every purchase they buy is unique. I was talking to a loan officer the other day where he had someone pre-approved at 10% down and but the job's not done. You know, like they bought this one or they wanted to buy a house that needed some home improvements. So he was able to show, well, hey, we can buy that house and you can put 5% down. And that gives you that money that you can use to put back into home improvements. So cool. So how do you think this year's going to play out for the local referral-based mortgage professional? You feeling good about this year? You know, what's your thoughts on the year ahead?
I feel like there's pent up demand. You know, I continually talk to people that have mortgages that start with a 3 right now, and they still can't quite get over that hump of, okay, I'm going to be biting into a 6.5% mortgage or 6 3/4 and give up my 3. So that's the challenge that we all have every day, I think. And some of those people, they're ready to move. Like I'm living out here. I want to be closer to my job. You know, I'm driving to work every day now where I used to not be. So that's the stuff that I keep running into. But if these rates kind of just come down just a little bit more, I think it's going to be a really good year. If they stay where they're at or even go back up a little bit, it'll be fine. You know, I think with the last 2 years of having periods of time where the rates went into the eights, I mean, and I'm still, you know, closing 10, 12 loans a month. So, I mean, there's still business out there every year, even with crap rates. So if the rates get better, we will all do more business because I've got plenty of folks out there that do have 7.5, 7 3/4% rates that I could get a little bit of refi activity.
Love it. What about, with realtors? I mean, you look at the data, less and less realtors are the ones doing business. I mean, it's a pretty small percentage of realtors that are closing consistent business. How are you, because you're winning, how are you balancing the realtors that you focus your energy around and, how do you prioritize top producers versus brand new agents versus agents that just don't do any business anymore? How do you
Yeah,
manage that?
that's a really tough one because what tends to happen is like the business gets tough, it sort of dries up, and a lot of them sort of silently roll out of the business. They still have their license, they could do something, but they're not making calls, they're not doing all the activities, right?
Right,
And
right.
when I'm here in this Keller Williams office, it's very helpful because I know who's doing the activities, and because I can hear them. You know, I'm right in the thick of it with them, and I typically have my door open so I can see and hear what's going on. But those agents tend to I'm here. It's a convenience for them, and I get a lot more at bats because I'm here. But you know, that is a tough one right now because there's a lot of agents that know, like, and trust me, and they kind of go a little bit silent. So I have to reach out to them. I will say our company has a really robust marketing program where we're emailing out every Friday. It's like, hey, here's our list of new homes that have come on the market that are eligible for this path loan program without any income limitations, or here this other assistance program we have that gives up to 2% better rate. And we email every Friday, and I get a lot of responses from that. Like, hey, well, my house is not on this list, but what about this other place? It just opens up opportunities for me to have conversations with agents.
Love that. So any closing thoughts for anybody tuned in to today's call? Any advice that you think you could give mortgage professionals? Think people that are one struggling or two new to the business. Any closing advice?
Yeah, I do actually. So I have had the same methodology for many years. And, you know, if you have more people applying, then you have time to do the quotes and you're just trying to struggle to keep up. That's one thing. But if you don't have that, you've got to find a reason to do 2 TCAs a day. And the reason I say that, so that's 10 a week, you know, if you don't work the weekends. And if you don't have somebody that's actively applied, then go through your database and find somebody that's almost there on a refi, right? And just put together the numbers, send them to quote. It's just like doing an annual review call. And with an agent, they've got a listing over here. Maybe you just do a TCA. So they've got an open house this weekend. Here's what it looks like if somebody buys this house, does 5% down conventional loan, you know. And I would say if you're struggling, you need to be going through the process. And if you don't have a client to send one to right now, find an agent and send them one on their listing. And maybe it gets your foot in the door. Another thing's going to open houses, right? You pop up, you got your Mortgage Coach app open. It's like, all right, you need me to pre-qualify anybody today? I've had agents here recently ask me if I would come to their open houses on the weekends. I'm like, yeah, absolutely. As long as my wife will give me a kitchen pass, for playing with the toddler, I'll absolutely come.
All right, dude, that close was so good. And you're going to see Jeremy and I in the coming weeks. Before the end of the month, he's going to be on the show and we're going to be announcing a challenge. So Jeremy has attempted to do hard 75 multiple times, and he actually recently, did it.
Mhm.
And I was, the idea that I'm going to share right now was inspired by that. And I wanted to come out with something, and I'm going to partner with Jeremy on this, and we're going to call it Winning in 30. So the inspiration is 75 hard, and it's going to be three things that a loan officer needs to do, three things a day for 30 days. And if they do these three things, they're going to be winning. And I was going to make it until I just heard this conversation with you. Winning is a TCA for every credit report. But I'm gonna upgrade it to two TCAs a day because of you. So like whether you got a lead or not, there's no reason that you can't do two TCAs a day. And so
100%.
that's one thing that a loan officer needs to do for this challenge that Jeremy and I are going to do. I always think that's going to help you have more quality conversations. The other thing that someone needs to do to win in this market is they need to have conversations, like quantity of conversations. So I think right now we haven't completely firmed this up, but it's going to be 10 conversations a day on weekdays. And on weekends, it's either 30 minutes of reading, 30 minutes of a podcast, a book Jeremy and I are really passionate about. He just read it. I'm about halfway through it. It's called Let Them. It's called the Let Them Theory by Mel Robbins. So it's going to be 10 conversations a day, every business day, 30 minutes, a podcast, or reading a book on weekends for 30 days. And then the other thing everybody needs to do to win in this market, you got to have great energy and great health. So we're going to make 30 minutes of walking every day. Now, Jeremy and I are doing our walking with a ruck vest. So if you want to get extra credit, do 30 minutes of ruck vest every day. Jeremy is doing, I think it's like a 40-minute ruck vest walk every single day. Even when he travels, he's going through the airport with a ruck vest or a ruck pack on. What do you think about that challenge? You going to join Jeremy and I when we kick it off?
I can certainly try. I mean, again, I've got this toddler at home, and I've really struggled
They
the
they
last
got
year
they
with
got
with
they got
help.
carts. You got carts. You can push your toddler on a 30-minute walk.
Oh yeah, well, yeah, absolutely, I can. I have all that. I'm a three-time Ironman, so definitely you don't have to tell me about that
Who am
component.
I talking to? Like I take back what I said a minute ago. Three-time Ironman. You know what you can and can't do. Who am
But I
I?
just did a dry 45, let's call it, because I was going skiing a couple of weeks ago, and I was like, man, I'm not sure I'm gonna be able to button my ski pants, and I don't want to buy a new pair. So I'm like, I'm gonna just put away the IPAs for a month and a half up until my ski trip. So I did that from January 1 through my ski day, and I squeezed into my ski pants.
Nice job. Well, hey man, when I'm in Raleigh, North Carolina next, I will ping you. I'll make sure
Please,
Jeremy sees this, and if he's ever in Raleigh, North Carolina, I'll make sure Jeremy reaches out and you guys go to coffee or you go for a run together.
that'd be awesome.
All right. Well, hey, Ryan, thank you for this. Anyone listening to this, hopefully you got value. If you have not liked our YouTube channel or subscribed, make sure you subscribe. SavageInsights.com is a place that you should be aware of if you got value from this. That is where whoever I'm interviewing next, whatever's happening is at the top. Some of the best content that I'm doing to turn loan officers into data-driven mortgage coaches. That's the place. Also have a text club. So if you're not in that text club, the phone number is towards the top of Savage Insights. Um, Anyways, Ryan, this is awesome. And take care, everybody. This is a wrap. Boom. All right. Take care, everybody.